Hi, I'm Greg Weimer. Welcome to Conversations with Confluence. Today, I have one of my associates with me, Chuck Zuzak, and he's one of the very talented folks that we have in our firm. He's the director of wealth planning in our firm. He's also a CFP, CFA, and has a team of people that also help him do the planning inside of our firm. So we thought today we would talk about a couple different things, and would touch on the big beautiful bill. And before you stop listening, we're just going to try to give you a couple things that maybe you haven't heard about, or make some of it come to life that'll be important to you. And then second, just financial planning. It's more than a number. I remember there's a book out there that's like, "What's your number?" And I see all these advertisements with these thermometers, and we just want to talk to you a little bit about financial planning done well. Certainly math matters, but it's really a lot more than just numbers. And then third, you hear people talk about comprehensive, and we just want to give some folks some thoughts and some services we have to really help you with what we mean by when we say we're comprehensive wealth managers and financial planners, what services that encompasses. So with that, Chuck, do you just want to touch on the big, beautiful bill and some of the things that you think our listeners would find interesting?
Sure, Greg, and thanks for that warm introduction. I think there are a couple of things that our clients and prospective clients really have probably latched onto in the headlines, but there's also a few things that I think that have gone a little bit under the radar. And when we're looking at planning and ways to advise clients and add value, these are some of the things that we pay attention to so that you can get the most out of the kind of the planning work that we're doing. Obviously, one of the things that made the headlines was the SALT deduction. That was a big contentious piece in Congress. How do we, placate some members of Congress where their constituents lived in states where taxes are very, very high? And they were the ones that were the losers from Tax Cut and Jobs Act. So at this point, it's been partially restored. For the last several years, it's been capped at $10,000, right? But now it's been raised to $40,000. So a lot of taxpayers in higher tax states will see that benefit
With income limits.
with income limits that start to phase out above $500,000 of income. So for those taxpayers that are above $500,000, they'll probably see some benefits, but they won't lose the SALT deduction entirely. It does go back down to $10,000. But that's going to be really important to pay attention to from an income tax planning standpoint, right? If clients are able to shield some of their income in legal tax avoidance schemes, that allows them to reap the benefit of the SALT deduction and not lose out entirely.
Okay, you'll hear a lot about if you're a pass-through organization, maybe there's ways around it by having the pass-through pay that tax. It's not true in the state of Pennsylvania yet. Maybe that'll change. So if you're a pass-through organization, you're not in the state of Pennsylvania, you may have the ability to have the entity pay the tax, which is unlimited, not to $40,000. Fair?
That's
So we'll keep you posted on that. And if you're outside the state, give us a call because we can. Oh, by the way, if you chat GPT that, there is some inaccurate information because I did. So just be careful on that. I was just checking it. What else do you find that people are missing? How about the one that you and I were talking about? Charitable giving. Charitable giving, I would highly recommend seeking advice on that, whether you should be doing a donor advised fund, doing appreciated securities, doing cash. There's limits. But do you want to talk a little bit about the changes in the new bill and how it's going to affect charitable giving?
Yeah, I think the planning around charitable giving will still be relatively the same, right? There's still the discussion of, do you bunch your charitable giving in one year and hope to itemize that deduction, or do you just give kind of de minimis amounts and plan around using the standard deduction? The big change that's going into effect in 2026 is limitations on how much you get to deduct in any one year. So starting next year, they're going to set an income floor for which your charitable contribution, that amount you will not be able to deduct. So starting next year, 0.5% of your AGI you will not be able to use for your charitable deduction. And so the reason that's important is people that are giving and itemizing, they tend to do so when they're in a higher tax year, right? They get a higher tax benefit from using an itemized deduction, but that floor creates an opportunity where they aren't able to use that charitable contribution. So what we think is if you are going to plan to give to charity, this would be the time to do so this year. So you're not losing that half a percent floor of charitable giving. Ways to maybe plan around that if going forward you still plan to give to charity, is to over contribute to charity. There are certain limitations around types of property you can give to charity, whether it's appreciated stock or cash or other things like that. So if you tend to give more than that, that could be a carry forward into the following years.
And that's new.
That's new next year. So this year, if you are thinking about giving a lot to charity, this would be the year to do it. You're not going to have that income floor limitation, and you're going to reap the bigger benefits from an itemized deduction standpoint.
Okay, so next year, your AGI is $1 million. You don't get to deduct if you give $20,000, half of 1%, 5,000. Simple math. You give away 20,000. You only can deduct 15,000 next year. This year, you deduct 20.
Yep.
But next year, anything you give over the limits can be carried forward to future years.
Correct.
I know that's a lot. Call. We'll help you navigate through it. But there are changes on the horizon. Okay, let's go to the next topic. It's more than the number. And we see I see on all these ads, it's like, they show that thermometer, and we have the same thermometer in all fairness. But it's more than math. And so do you want to just dig in a little bit how we think about the families and individuals and entities we serve and how we really think about it's more than the number?
Yeah. Yeah. I mean, I talk about it all the time that you can take two identical sets of clients with very similar balance sheet profiles. And what client A wants to do and client B wants to do can be totally different. And the planning that we do for those clients are totally different. They might have the same financial resources, but the money that they have is just a means to an end. And so when we're working with clients, what we really want to understand is what is important about money to them, right? Do they have a sense of financial insecurity? Do they use it, to buy more time to spend with their family? Maybe they really care about leaving a legacy while alive or at their death. So we really want to uncover what is the purpose behind saving and investing and doing all the things that you want to do, and especially within your career too. People come to us for career advice. I have a really good job right now, but I don't love it. But it allows me to do these other things.
Personally.
No, not speaking personally. But allows them to do something, financially that they otherwise couldn't afford. So everything that we look at when it comes to financial decisions, there's trade-offs. And what we're trying to help clients uncover is their values and their motivations and how one particular set of decisions makes more sense than another because it aligns with those thoughts and feelings.
And my minor in college was math, but that's why we're in the business.
Right.
Like that's the fun part because families truly are unique. They rhyme, but they're unique. And how people view money is so personal. I just find it, I find that to be the value of what we do and the really interesting part. And to your point, how people spend money is not linear. It's life happens. So, it is about math, and we can give you your number and tell you if you have enough money to retire, how much money you're going to leave to your children or charity someday. But even more than that, we help you navigate. The plan should help you navigate through your life.
Right.
Fair?
Fair.
Okay. Let's go to the final thing. We say comprehensive. Can you give some of the things that you and your team do for our clients that are truly comprehensive?
Yeah.
Because it's not just the plan.
Yeah. I think we're in a unique position as advisors to see everything about our clients' lives, financially, personally. And we really want to understand if all these pieces to the puzzle are fitting together the way they should, right? The financial plan only makes sense if the numbers are right, the goals are right. But how do we actually get to the correct numbers? How do we make sure that if I'm leaving a legacy, that it's going in the right place. And that means taking a look at other things beyond just 401k statements or a brokerage account. So we really try to take a deeper dive into our clients' lives, whether that's reviewing their tax returns and making sure that the things that they tell us are accurate about their financial picture. It's very easy for clients to think they did something or take a deduction or make this charitable contribution, and when we go to see the record, the one that the IRS holds valid, we might catch something,
Right.
right? And it's really important to understand that we're doing things that help our clients and catching any kind of mistakes that they may have done. You do see a lot of self-prepared returns, so it doesn't hurt to have a second set of eyes. And when it comes to their estate plan, I mean, some clients have a very comprehensive estate plan. Other clients are still trying to figure it out. So where we can sit in that picture is helping them understand different options, why it's important to have your will, why it's important to have powers of attorney. All of these documents serve a purpose, and clients frequently go to attorneys. They get these documents drafted because they know it's important, but they don't really understand what they say or how to read them, what it's going to mean in the context of their plan. So we're able to take those documents, review them, put together a comprehensive report, and really help them understand that their goals and their wishes are really in alignment with what these documents say. And if they don't, that's an opportunity for us to talk about what they do want to have happen. And then they can go back to their attorney and update those documents so that everyone's on the same page. But again, if they're only just talking to other advisors in a vacuum, you may not see that all the pieces are working together the way they should. And that's where I feel like we can do that.
It's important. We're not doing preparing the taxes, but we're doing the tax planning. It helps us manage the portfolios for our clients. It helps us get a different glimpse into their lives. So we do for a lot of our clients, those that are interested, we get their tax returns, and you and your team are very good at doing the tax analysis, and which is very valuable. And then, like, as we talked about, life happens. So it's really important from the estate planning. I know people say, "Oh, I have my documents," and then we look at their documents. And it's like, "Oh, I didn't know that. I didn't know that person was still my trustee," or like, "Wait a minute, if something happens to me." And so your attorney does the documents, your accountant, but we tend to know our families very well that we work with, and so. As we're filming this, I'm on my 6th version of my trust because life changed. So we keep tweaking it and helping evolve. But you and your team, thank you, have done an amazing job of helping our clients really understand what those documents say and really understanding their tax returns. And that truly is, in our world, comprehensive. So thanks for doing that. And I'd just add one more. And the one more I'd add is insurance really is an important component of a financial plan. And what we have found, some people do insurance, some people do investing, and the insurance folks tend to do too much insurance. The investment people do too much investing. They're both important. So the insurance is really important to your loved ones. We got to make sure it's the right policy. Sometimes it is, sometimes it isn't. Let us look at it. We'll tell you, give you a second opinion, and hopefully it's the exact policy you need for your loved ones. But I'd say another comprehensive thing we do is we do a lot of insurance policy reviews. Well, thank you. It was great to get an update, and we appreciate all that you and your team does in helping the clients we serve. And we look forward to helping all of you in the future. If we can help, we're happy to have a conversation. Please connect with us on our website or give us a call. Thank you so much. We appreciate the time.